you have to look at the how the candle close it. Okay, if it close below the sell zone, then you wait for the second candle. All right, for those who are aggressive, now could be the time. All right, but you have to be careful. If you are using smart money concept, then this could be a bounce here. Hello everyone, welcome back to FX 20 pips. Today is the 1st of June 2023. Today is a Thursday and time is currently 11:43 a.m. GMT plus 8 my time. I have changed the screen to stretch it out, so now you don't see any black screen on top here. Okay, basically I have expand the screen up and also horizontally and vertically. Now I am at the 1 hour chart of the GBPUSD. Okay, currently it might seem all complicated to you, but I just like to explain to you what is going on. This is today candles. All right, yesterday I did not do a video. All right, and then this is Tuesday, right? This is Wednesday, and then this was the Monday. Okay, where this was the bank holidays, right? So what I'm going to do is I did a video on Tuesday and I am just going to explain the actions here, if I can explain it. I try to explain it. All right, and we will see whether you can understand why the price goes there. Okay, so I'm going to cut off some of these candles. All right, and then just bring the screen back to here. So this is what I'm going to do. Let's go to replay and stick it up there. All right, so here we go. So just remember, this is Tuesday, okay, where I did a video. All right, so I just want to explain here. Okay, so in the introduction of this video, you heard me saying that if this candle is going to break the sell zone, you wait for the second one. All right, for continuous bearish selling. Okay, but what happened is the candles did not close below the sell zone. All right, now I'm just going to remove all this at the same time so it's not complicated to you or confusing to you. Just hang on. All right, so I have removed the futures candles. All right, we are in replay mode. Just remember, this is the Tuesday activities that I want to talk about. Now, if you look at the introductions of this video, you will remember that I said if the price is to come down here and close, you gotta wait for the second candle. Now, what happened on Tuesday is the price, you will see that it is very bearish, and then with a continuation here, after which it went all the way back up and never come below the buy zone. That was on Tuesday. I also did mention previously that if you are aggressive seller, you would have sell when the price is in the sell zone. Now that would be a lose to you, right? Because the price did not carry on to go further bearish. However, using the breakout sell, top of it as a stop loss, the market would have told you, no, I'm not going down, I'm going up, whereby it would have hit your stop loss. So what would be your damages here? How much would you be losing here? So let's take a look. If you have sold on the middle part of it and then back to your stop loss, so your damage could be 2 pips, okay, as shown here. Now 2 pips losses, whereby the market tells you I'm not going down, and for you to then relook at where the market is going, you could have easily recouped your losses. Okay, let's try to take a look and see how many pips this is. So come here, right? Let's be realistic. Okay, let's say you only start to buy at this week. You're not sure, you see the bullish candle, all right, and then the next candle it started with bearish and then shot right back up. Now realistically, you would buy when the price closed above the previous candle here, right? So let's say what's the pips here to here? Here all the way to the top is about 96.4 pips. 96.4 pips compared to your previous losses of 2 pips here, right? When you put your stop loss up here. So it is alright to let the market tell you that you are wrong. You need to then quickly readjust your focus. Do not think about the losses of these 2 pips. You need to quickly think about where the market is going. And here the market rewarded by giving you a runner, okay, all the way from here to the top. Okay, this area here is when you are gathering your thoughts, because you are still recovering for your losses of 2 pips. Now you might say it's only 2 pips. For some traders, the 2 pips could be $1,000. All right, could be a $500. Okay, or it could just be a $1 losses. But a loss is still a loss. So you need to quickly regain your composure and think, all right, the market is telling me I am wrong. It doesn't want to go down anymore. What's next? You might be thinking that price is in between buy and sell zone. Maybe I don't trade here. That's true. But you must also think about price rejecting the sell zone. And price then go above the 50 SMA. Right, it closed above 50 SMA and it keeps going up. Right, now if you were to draw a trend line here, you could see that price broke the trend line, closed above the 50 and shot all the way here. At this moment you might think that, oh, should I take profit? There's nothing wrong. You have a bigger trend line. The price stop at the breakout buy. It could exhibit a behavior of what happened here, rejecting of the sell zone. So as you can see, closes here, the second candle goes back down. At no time previously did it close above the buy zone. Right? Did it close above here? No. Alright, so at this stage you might highly probable think about taking a profit. There's nothing wrong with it. Okay, especially when you see the next candle that is a bearish. Now, when you see the candle start breaking the top of the buy zone, it's from your own experience when you want to re-enter the trade again. you might think that, okay, I want to wait until the candle close above the buy zone and wait for the second one. Based on that theory, this candle close above the buy zone. This is the second candle, and you can see that it is pretty bullish. Close above the buy zone, carry on of the second candle. Realistically, once the price close above the high of this candle, you will buy. Alright, and then for the next 2 hours, you are worried because you look at it. Did I buy too high? Away from the buy zone? So these are some of the things that you need to consider. Say you buy from here to here, how much pips can you get? Let's measure it. So we have here to here. So you got 16 pips. And then after that, the price starts to come down. Now, hope you are following me. And if not, you can of course replay this video and listen to what I was saying, how I explained my thought. So one thing that you learn from this is that if there is a rejection of the sell zone, a break of the minor trend line, if you drew one, a close above the 50 SMA, what are the other worry that you have that you don't want to enter a buy here? So you have to be flexible and look at what are the factors affecting, right? Second thing I want to talk about is, how do you know this is the top? How do you know that, alright, price come here, where will it stop? I have always said, if the price is going your way, let it run. When you are beginners in trading, as I explained earlier on, there is nothing to stop you from taking profit here. Because when you are in profit, the more money you make, the more worried you become as an untrained traders. Should I say untrained, or should I put it inexperienced traders? Not inexperienced, not because you don't know how to draw the lines and all these things. No, inexperienced as in your psychology is not ready, it's not strong enough. You have all the knowledge, you are skillful in all the indicators, you know how to draw all the lines, but you did not train your psychology. Says every pip is $10. By the time you reach here, you could have made some money that psychologically you know that it has to be achieved as a normal worker, maybe half a day of work or even a full day of work. So the more money you make in this successful trade, the more worried you become. You will then switch to a mindset of, where should I close the trade? Where should I close the trade? So this will be the time when you get so worried, you want to secure your profit, and then what happens? You close the trade. You were happy for a while until you see the price shot up further. Now, this candle will induce a negative feeling in you because you were thinking, instead of just making, for example, $300 from here to here, and by closing early, I failed to make another, for example, $500. Okay, we just look at the length. Okay, roughly this is 300, or maybe even double, 600, 700. Okay, so my point is, the feeling that you get when you miss all this profit is worse than losing the 2 pips. That's why I say in my many videos, taking profit is harder than losing. Hope you understand what I'm trying to say. So, how do you know the highest price for this day on a Tuesday is here? Nobody knows. Nobody knows. Maybe Fibonacci knows? Let's take a look. Scroll back left here. What do we have? We have a rise up, break the structure. This is a structure, right? You can say this is a structure down. All right, this is a structure down. Instead of going down, it went up. Break this structure here. So this was Tuesday, Monday, and this is Friday. So from the low of here to here, where the push up to break the structure, let's draw a Fib. Let's get a minute. From here to here. Now I want you to concentrate. Price went up, came down, price range, why? Monday, bank holidays. You don't trade these bank holidays. So price went up, came down, no liquidity. Price came down again, hit the 78.6. If you see my many videos or even in my Discord group, price reached 78.6, very high chance to come here or here. Right? So Friday, it's the break of structure. No action Monday. The next day, from here it went up. See, the first time it reached this level, it slowed down. And then it tries to hit this level again. So, if you have been drawing Fibonacci, been doing your daily routine, been doing all these repeat actions daily, this will be part of your activities. These will be lines that or levels that you will target, and because of that, on the Tuesday, when you are looking at this sell zone, what are the chances that you would wait for a close here? You might think that, right, I may have to double look again at this level. So with your daily behavior and constant drawing of the Fib, and at the moment when you see this happening? What would be your behavior be? If you have done this all the time, you would believe that there's a higher probability of price bouncing from here go to these two levels. So there will be a very low chance that you would take a profit here, with the idea that if your trade is profitable and going according to your direction with the backing of the Fib, there could be a higher chance that you would have let this run. You get what I mean? So daily routine, repetition of drawing all these Fib, you must cultivate to do it all the time, every time you look at the chart. I can also add on that when you learn the technique of adding to a winning trade, there will be many areas where you add on. For example, when you're in a trade here based on the bounce of 78.6%, any retracement like this, you will add in a trade. A rebound on the 50 SMA, you add in a trade. A rejection here, you add in a trade. A breakthrough of the buy zone, you add in another trade. Okay, when you reach here, you could have taken out all your profits. Isn't it much better than the 20 pips or the constant worry about the trend line, the double top, okay, the double top, where you give yourself some idea that, oh, it's reaching double top, I'm going to close the trade. Where smart money concept only tells you to go to the next high. Usually in a lower time frame, smart money concept would have asked you to take profit here, because this is a double top in a lower time frame. Hope you are absorbing all these informations. Alright, so what happened here? Simply, price shot up, it has to retrace, and retracement, you have most probably you would have taken another trade after you close this one. Alright, if you did not close any trades, okay, and when price come back down, you have bullish, 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 and you know that this level has reached and price comes down, logically you should have already closed the trades here, right? Now what happened here is that price then come down and sort of retest this area, right? And the price shot up again. So this was for the Tuesday trading session. Okay, and what happened then? Wednesday, I didn't do video. Alright, and today we are on Thursday. So this is the thing that I want to touch on. Okay, so how long are we in now? We are 24 minutes. This could be one of the longest video, but I hope that you appreciate the explanation I give you. Right, we are still in the replay mode, so I'm just going to close this replay mode and go back into the current session. So let's close it. Yes. Right. So what do I not need? I'm just going to leave this one, the Fib here. So we have I talk about the Tuesday. So I'm just going to talk quickly about Wednesday, which is yesterday. Price came back. All right, Wednesday, and price dropped back down again. Where did it bounce off? It bounced off this higher time frame trend line. Right, and then all these candles are from news. If you are aware of news coming on, whether is it GBP, Euro, USD, maybe you don't want to trade, or if you're looking at the chart, you should expect some wild movement. Okay, let the market do what it wants to do before you decide on the next course of action. Now, if you are not one who look at news, then simply by looking at the candlestick or even the breakout level, you would think that this is a retest of the 8-hour range. It broke out of the 8-hour range. It retest. Right, this is the top of the 8-hour range. It moved up again. Now, when you see this big bearish candle yesterday, you have to let it retrace, and some of the possible area will be retrace back here again. And what we have seen is, of course, it retraced back to the trend line, play along with the news, and now it's up here. Right? Okay, so we are now into Thursday. All right, this is the 1st of June. It's a new month. Okay, so the last 2 days of May was pretty hectic here. Everybody trying to put in their buy position or sell position or close out the trades for the month. And today we have a new start. So what I'm going to do, I'm just going to quickly look at the monthly candle, and then we come back to do our daily routine. Right, so let's do this. Let's hide away all these Fib. Okay, all these breakout buy sell. Right, just give me a moment. All right, so here we are. We are at the GBPUSD monthly. That was the May candle. Basically, you have sellers coming in, you have buyers that push up on the past few days, and I'm just trying to see what's the level that we close at in terms of Fibonacci. So let me draw a Fib here. How should I do this? Okay, let's go to here and here. No, I just want to see. So it closed above the. So I'm taking the high and low of this candle. Right, it closed above the 50% of this bullish candle. Right. Okay. So like what I say, sellers came in, buyers came up. Right. So this is the new candle, June. First day of June. So currently it's stuck in here. I don't know how it's going to form. I got no idea. It's a monthly candle. So any week or any days could just change the size of this candle. Right. We are still below the 50 SMA on the money time frame. Fundamentally, the US debt ceiling seems to be resolved. 60%. I believe he has to go through the Senate and the president got to sign off. But what we are looking at is the debt ceiling is going to be lifted. And yesterday there were a lot of federal governor speaking, and some of them said that the June US interest hike, they call it skip one session. That means they are not going to increase the rate based on what they spoke yesterday. They don't call it as a pause, because to them pause is you pause for a period of time. They call it skip. Okay, the effect is still the same, meaning that there are higher probability they are not going to raise the rates in June, the 14th of June when they're going to meet, and yeah, but they use the word skip instead of pause. Anyway, so fundamentally, I'm looking at price to try to touch this 50 SMA based on that sentiment. Okay, how much pips do we have? Potential. So here to here, there's about 415 pips. 415 pips. Now, at which stage would you think about entering it based on this monthly chart? Logically, when the June candle closes the top of this May candle, logically, isn't it? Right? For price to go further up. You can also look at closing of the high of April candle. Right? Now, if you are waiting for here, how many pips could you get? Let's see. From here to, let's remove the minute. From here to here, it's roughly 170 pips. Okay. Right. So that gives you an idea. But if you were to look at it in the hourly time frame, you could get in very early, and then potential of maximizing these 400 something pips and maybe into 800, 900, because if you use the concept of adding to your trades, 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 you'll come up here very good. Don't get me wrong, a nuclear war could just send everything to hell. So trade what you can afford to lose. Right, this is the monthly candle. So what I'm going to do is I am going to do my monthly routine, which is find out the high and low of this May candle. So this is what I'll do. I'll get a minute, put the high, put the low, I get the 50% of it. I think it's about here. Let me look at the figures. 1.24939. 1.24939. Here we go. And I remove it. Oh, it's not that one. Yeah, there we go. So I have the levels for May, high, midpoint, and low, which also means that you can take your chances if price go above the midpoint. Right, there's many ways to trade. I'm just throwing out ideas to you. Right, let's go back to our 8 hours straight. Here we go. Okay. So we still have that mid-level here. Let's do our daily routine, which is our 8 hours box. Right. As you can see, I haven't moved the box yet because I just want to do it together with you in this video. And you can see that the candles broke out of this range box close above. The second candle was above, even though it's bearish, right? So by right we should be moving the candles, the box rather. So I'm actually looking at this bigger one, right? Okay, now all these range boxes, in this 8 hours time frame, basically you're looking for inside bar, isn't it? These are all the inside bar. Okay, the way I do it is I just box it up and I just use my term range box. Right, so let's do that. Let's move it here, expand it. So we got an updated one based on this candle. These are all the inside bars, right? It's hitting the 50 SMA on this 8 hours time frame. Again, I'm looking at the higher time frame bullish. I don't get myself involved in selling here. If I'm neutral, this could be a good place to sell, but let's not go into there and confuses you. Yep. All right. So price, this is June, don't forget, first day of June. Price is still on the high side of this candle and the top side of this 8 hours range box, right? So again, the basic principles of first and second candles: wait for the candles to close and then see what's the second candles look like. Okay, if you are only looking at the 8 hour time frame, if you got no time to stare at the chart, that's basically what you have to do. Just look at the higher time frame. All right, let's move on. So with the 8 hours range, let's go to the 1 hour. Okay, so here we are. There's a 1 hour, which is quite a bit of the action past few days. Okay, I'm interested to find a fib level here to here. Let's draw a fib from here to here. So we have again 78.6. First level is here. Let me just zoom it up. Okay. Fib level 78.6 bounces. Is this a retest? I don't know. And potential to this level, right? Let's remove this fib. Let's draw our breakout buy and breakout sell. So here we are. There's a top bit. Put it down. Expand it. Breakout buy is here. And breakout sell, I'll just do it here. So I have the top of Asia session so far, where the body is to form this breakout buy. So for the breakout sell, I have the bottom of this early morning wick to the second lowest level here. Right, so to me, if the price wants to go up, then of course it has to break up above and close above the breakup buy. Alright, there's no harm drawing a trend line again. That's what we can do. 0.1, you can do 0.2 here, you can do 0.2 here. Alright, of course, the tighter the angle, the earliest you get jump into the trade. Alright, so I'm quite happy to give it some gap here. Let me just zoom in a bit better. Okay, hope this makes sense to you. Yes, and let's do a continuous to our daily routine. What am I missing? Yes, the previous day. Here we go. Previous day. It's all here. Let's shift it up. There you go. Let's push it nearer. Yeah. Oh no, then I have shifted my Monday opening. Go back. 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 There we go. So the Monday opening should remain on Monday opening. Then let's move it individually. Previous day high, drag it here. Previous day here. Then previous day low. Let's put it here. And the midpoint here to here. Right, so that's about it. The low high midpoint. Okay, remove it. So that's the daily activities. So to summarize, we have a new 8 hours range box. We have the breakout buy and sell. We have the trend line. We know the previous day high, midpoint, low. We should also have the previous month staring at us, which is, yep, this level in white. Okay, level in white. You can also plug in your previous day wick. Right, hopefully it's not too confusing for you, but these are some of the levels. Okay, potential resistance, potential resistance. All right, something you should you might want to look into, with the idea that if price were to keep going up, it might bounce and come back down, retest, break through it, and do what it wants to do. So every time it hit the resistance, comes down, remember the concept of adding to your winning trades. Only when you have a strong belief, like me, that the higher time frame is bullish. Otherwise, you can just simply do your 20 pips. Take your 20 pips, get out, compound your account, do your 20 pips another day, get out, compound your account, rinse and repeat. Or if you are ready, then you got to practice your adding to winning trades. Every time it comes back down, say you buy here, retrace, you buy again, you break up. Alright, wait for it to retrace, buy again, break up, retrace, buy. And then once you get that, you know what's going to scare you again? The price come all the way back down. That's why trading is fun, isn't it? Right, with all the skills that you have, technical skills that you have, it's nothing compared to what the market can do to you and to crush you psychologically. Well, that's something you need to learn for yourself, by yourself. I can't go into your brain and turn on or off switches. You need to experience it, the winning, the losing, in order to solidify your belief in a system. It looks easy and wonderful. Some of things is hindsight that I provided to you. But if you keep seeing consistent things that's happening based on all the hindsights, then it changes your brain a little bit. You start to do those things that will help you, like the Fibonacci. All right, find the high and low, get the 78.6, and then aim for that higher target. Right, so these are things that you need to keep doing it, keep repeating it. It's not every Fibonacci that you draw will give you that result. All right, so that is where you have to use your gut feeling, whereby it is from your time spent looking at the chart, drawing the chart. Okay, there are hard work that you need to put in, right? So at this stage, at this 1 hour chart, it's sort of breaking up the trend line. Not yet. You can also go down to the 5 minutes chart, have a look at it. Right, at which stage do you want to enter? Do you want to enter now? Do you think about smart money concept, or do you think about Fib? Break the structure. Is this a block here? So if this is the breaking of the structure, then you might want to draw the wick here based on this wick. Are you sure or confident that you want to enter here? The market gives you a second chance. Are you sure you want to enter here? When Frankfurt has not opened, when London has not opened, okay? When you look at the other way, you have a lower high, okay? But you have a higher low. So the more you look at it, sometimes it confuses you what method you want to use. Fibonacci, smart money concept, breakout buy, breakout sell. It's something that you have to find that suits your personality, or maybe even suits your time, because you could be working full-time, then you have to look at 8 hours. All right, so there are many other factors that it's so easy for me to just put it on the screen, but to actually trade it, you have to think about what method you want to use. All right, so where are we now? We are at 50 minutes. This is a pretty heavy stuff, I think. Right, hopefully you can watch the video in one go to get the gist of it. Right, so we can also do this 1.2 point. You see 0.1 here, this is 0.1, this is 0.2, Is this coincidence? I don't know. I got no idea. But you just look at what the market is giving you. All right. You might just come back down again, up again, down again. Time for London. We'll make a decision to go up or down. Right? Let me just adjust the thing. There we go. Don't forget this is a 5 minutes chart. So let me adjust again. Put it here. Second candle. Right. Okay. Yep. So I believe it's long enough today. Let me just jump back to the 1 hour. Okay. Right. Because the trend line adjusted in the 5 minutes, so that's what it's showing here. Right, let me just get it back properly. Put it here. I think I put it there. Right. Okay, let's do this. Right. So this is the hourly chart. We got all ready. Right, so that's all for today. Hope you enjoy today's video and hope you learn something. Right, that's all. Goodbye.